Hello everyone, George DeSantis here with the Look at the Market for the week ending Friday, March 13th, 2020. To say the least, it's been a pretty hectic week with the incidence of the virus and all the consequences of that, and the closings of schools and businesses. I even went to Apple today about my iPhone and they were closed. So it ain't easy. In any case, we got to keep moving. Um, Before we begin to look at the charts, etc., let's bring up the disclaimer as usual. Just read it, make sure you understand what it says, that I'm not trying to give any particular person individual advice here. I couldn't possibly do that. There are about 150 or close to 200 now people who get this email with the links to the video. So anyway, what I do here, for those who are new, is I tend to look at the market from a broad perspective. In other words, look at the S&P 500 especially. Sometimes I look at the Nasdaq and the Dow, but we try to take a broad perspective, looking at the 500, and then we zero in on some individual stocks. I have quite a bit to present to you tonight, so we'll try and see how much we can get through. If not, what I'll do is discuss the general market in one video and then switch to another video where we will do the individual stocks. Anyway, let's get going. So take a look at this disclaimer. Okay, so let's do it. Um, I'm going to do something a little different this week. We haven't done this in a while, in a long time, but we're going to start off by looking at the monthly chart. You know, if any of you read Alex's books, which, you know, I'm very fond of, as you know by now, Alex talks about the triple screen approach. And basically, we want to be trading in the direction of the trend. So if you're trading a daily chart, you don't want to be trading against the trend of the weekly chart. You want to be trading with that trend. If you're trading off a weekly chart, you want it to be in sync with the monthly chart's trend. So let's take a look. On the monthly chart here, I have two charts. I have a chart showing you the Ishimoku cloud, and I have a chart showing you the regular indicators that I use. Um, it's a little crowded, but I'll try and see if I could explain it to you. First of all, uh, let's do what we always do. Look at the exponential moving averages. The 4 exponential moving average just crossed below the 9 exponential moving average, and the 9 is still above the 30 weighted moving average. So insofar as these two averages are concerned, we have the beginning of a downtrend. Now, the parabolic with the parameters I use, which is not the default parameters, but I have discovered these two quite well. But the parabolics are now above the most recent bars. So parabolic is saying we are now in a downtrend. Well, one just has to look at the chart and see that we had these big bearish candles. What else do we see? We see that when the market pulled back here, I took the Fibonacci retracements from the December low, okay, to the February high, December of 18 low to the February of 20 high. And what we had is a retracement back to the golden rule is 618, 61.8% retracement. And it's called the golden rule. You could go look it up and read about it if you wish. But Fibonacci is an interesting mathematical phenomenon or theory. Now, I sent you an email from my friend Mike at Raymond James, and they discussed two levels here at which we need to keep an eye on. 25.59 on the S&P, as well as 22.35. The article claimed that, as I recall it anyway, that we should find our support here, and if not, we then look for support at 23.35. So we close close to the 618. This is the closing price. We close right just below the 618 retracement level. And one might then ask, is this an indication that the market is beginning to bottom out here. Now, the other thing is take a look at the shadow or the wick of the candle. Dan Gramser talks about the fact that the wick tells you, this long wick here tells you that traders were rejecting this price, anything around 2,500 on the S&P. They were rejecting it, and the buyers were coming in to drive the price back up. We saw that at the end of the day on Friday, especially end of the day yesterday. What else can we see? Well, first of all, in retrospect, of course, we can see that even though we made a higher high here than here, MACD made a lower high, MACD histogram. So in retrospect, looking back, we could say, hey, we had a bearish divergence. Going down the indicators here, Williams percentile just crossed below the magenta line, and that is usually a bearish indication. And look at the formula too, the sum of the rate of change indicator just dropped below 4%. These are the bearish indications, okay? Now, if there's any glimmer of hope here, and there is, we can see that the price on the monthly chart, S&P, just touched the top of the cloud and found support there, I suppose, and the traders rejected this price at about 2,500. So that's a glimmer of hope. And then we close, as I said before, 618. So we'll see if we find support, or if the support here holds any longer. If not, we break through and we come down perhaps to this 2235 level. Personally, I'm not expecting, and I'm hoping, of course, that we don't do that. Okay, so now we turn to the weekly chart. And on the weekly chart, as we always do, let's take a look at the 4 EMA. The 4 EMA crossed below the 9 here 3 weeks ago. Well, 2 weeks ago, really. Since then, it's been trending below it. And the 9 just crossed below the 30 weighted moving average. So now we know that we have a 930, as it's called, downtrend. And we saw this very bullish, very bearish candle here. It was a very big red body candle. But we have this shadow that, as I discussed earlier, tells us that traders are rejecting this level. And that might give us a hint that perhaps we've put in a bottom. For now, we could make a double bottom. We could go up here, find resistance, come back down and test that bottom, which is very likely to occur. But for now, we seem to have found a good bit of support here. Now going to the parabolic, you can see the parabolic is above the most recent bars, and that tells us we're definitely in a downtrend. No guessing here. MACD, you can see that MACD histogram turned bearish in concert with this up here, with what we see here. And one of my favorite indicators, Williams percentile, popped below the -50 line or the magenta line, as did the sum of the rate of change indicator. So the weekly chart is bearish, with a hint that we might have found support at around this level here, that 25.59 level that the folks at Raymond James had talked about. Now, if you go over to the cloud, you can see that shadow, that long shadow, again, 2,500 being rejected, traders bringing it back up to price here to 2,700. So now, in addition, we see we're closing within the cloud or inside the cloud. And the other thing to note is that the volume was pretty high here. It was like more than twice the usual, twice the average volume. So, there's a lot of volatility, as we all know. So on the weekly chart, we have a downtrend. There's no doubt about it. There are glimmers of hope of a support level somewhere around this low that we made last week. And just quickly then, here's the daily chart. And you can see this breakdown started way up here on February 21st or 24th. Although you could see that the parabolic gave us that first hint right here on the 20th of February. And it stayed above the most recent bars with a brief pullback gap up here, but since then it's come down again. So we are definitely looking at a bearish scenario here. However, you notice that MACD ticked up again, and that's encouraging. And we have the Williams percentile ticking up on Friday, as did the some of the rate of change indicator. And we don't need to belabor the point here. We can see that we may have found support around this 2500 level, and we'll see how it all plays out. Let's take a look at some other charts. So let's take a look at some of those stock charts, charts from stockcharts.com. And the first one here is Apple. You can see I bought a little bit of it back again. I used to have it last, for a while, and then I took profits on it. But you can see that we have a blue bar now on the impulse system. So the blue bar tells us that we're allowed to go either long or short. Since it's blue. If it was red, again, I couldn't go long. So according to the impulse system, so I bought some. I didn't buy a whole lot in terms of the amount that I usually trade. So let's take a look at. Here's a weekly chart of that new high, new low index, and you can see that I wanted to show you a weekly chart so you can see what happened in December of 18 compared to what is happening now. In fact, we are even lower in terms of the number of new highs versus lows, minus 12,839. And the way we use this is when it goes back up and crosses above 4,000, we are likely to see a nice uptrend from there. As we saw with Apple, we are seeing a blue bar on the S&P in terms of the impulse system. So we allowed to go long or short, but I am, I went long. I bought a few things. Here's a daily chart of the percentage of stocks of the S&P 100 above the 200-day moving average. You could see it dropped all the way down and ticked up a bit on Friday. Before we take a look at some individual stocks, I just want to conclude with that general review of the market by saying, look, I mean, it's quite possible that we're going to see some overhead resistance, and that this market is not just going to make a V recovery, and I have been saying that for a while, but we might stay in a trading range. So even though I bought Apple and Microsoft again, it may turn out to be a trade, not something that I'm buying to hold for months and months. It depends on the price action. Let's take a look at some individual stocks on Shaken. Here's a list of stocks that I either used to own or I don't own much of anything right now, but take a look at something here. All of these stocks, many of them with few exceptions, were up significantly. Look at the percentages that they were up here on Friday. I will go slowly so you could see them. 11%, 14%. Most of them. Visa up 9%. XLK, maybe a good time to buy XLK again, but we'll take a look at that again in a minute. But you see, most of these stocks that I used to own, have owned for a while, whatever, they're all mostly up. So we are getting a bounce, but is it only a bounce? We don't know yet. Okay. I added Eli Lilly to the list because there was one of the doctors, the researchers on TV, on CNBC being interviewed. He says that they have a relationship with a company called AbCellera, and they've isolated the antibodies from a patient who has the virus, and they're going to be using the antibodies to try and develop drugs from it. So I added Eli Lilly to the list. The price movement that I'm noticing here is that many of them were oversold, and now they are on Friday at least they had a big gain, and you see that pip there at the top, they closed at their high, so that's very encouraging. I think that's all I have for you for today. Stay safe, wash your hands a lot, use some sanitizer, whatever. I'm hunkering down a bit more than I usually do and staying home, reading and listening to music and day trading the market, doing quite well with that, averaging about $2,000 a day in the last 9 days. Have a good day. Have a good weekend. Bye-bye.